see you.
Avatar: Fire and Ash is now streaming on Disney+. It's the film critics are calling the best Avatar yet.
Yeah! Go, 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 go!
A true epic and completely jaw-dropping.
This is the only pure thing in this world.
Return to Pandora on Disney+.
It will be an adventure for the whole family.
And watch the Oscar-winning phenomenon at home.
This is sick!
Avatar: Fire and Ash, now streaming on Disney+. Rated PG-13.
Growing a successful business has never been easy. But whether you're navigating a complex industry or trying to reinvent one, our breadth of banking experts are here to collaborate on market-proven solutions. At KeyBank, we're built to grow with your changing needs because we're not just here for the business you are now, we're here for the business you'll become. Reimagine business as usual. KeyBank opens doors. Learn more at key.com/B2B.
Hello and welcome to Fintech Insider Insights. I'm Laura Watkins, Director of Media and Marketing here at 11FS. Today, we're talking about financial services marketing. For years, fintechs grew by offering something genuinely different. Better apps, better experiences, fewer fees, and fewer frustrations. But in 2026, the landscape looks very different. Digital experiences have become the norm. Customer acquisition costs continue to rise, and products and features that once felt revolutionary are now expected. At the same time, marketers are navigating huge shifts in technology, customer expectations, and AI, while experimenting with new approaches to growth, loyalty, and brand building. From Monzo's famous referral program and Year in Monzo experience to Revolut's Welcome to My Bank campaign, financial brands are increasingly investing in community, storytelling, advocacy, and emotional connection. So today we're asking, what are the new rules of fintech marketing? To help answer that, I'm joined by three fantastic guests. First up, we have Nicole Heringer, VP of Brand and Communications at Enfuce. Nicole, welcome to the show. Please tell listeners a little bit about yourself, Enfuce, who hopefully they already know, and your role there.
Yeah, thank you. Super excited to be here. Long-time listener, first-time guest, actually. Yeah, I love human-centric branding and pushing boundaries in B2B branding especially. And Enfuce, we're the issuer processor that was born in the Nordics but built for the world. We help banks, fintechs, and global brands build amazing card programs, all with happiness built in.
Fantastic. And you've got that pitch down. I like it. And joining Nicole, we have Lucy Heavens, Chief Marketing Officer at Vixio. It's fantastic to have you with us on the show, also making your debut. Please tell our listeners a little bit about yourself and Vixio.
Thank you, Laura. Yeah, so as you said, I'm Chief Marketing Officer at Vixio. So Vixio are a RegTech provider, that's a regulatory technology provider. So we have the number one, I'm allowed to say that, I'm in marketing, the number one regulatory change management platform for financial services and gambling firms, which basically means that my job is on a daily basis making sure that compliance teams don't cry over their coffee every day. So I'm also a part-time fractional CMO helping RegTechs with their go-to-market strategy as well. But I've been in the kind of the fintech or financial services space for a long time now, for around 25 odd years. And I started out at firms like kind of Fiserv and IBM before properly falling down the RegTech rabbit hole. I also am host of my own podcast. Am I allowed to say that?
Absolutely.
Which is called CMO Therapy, which is a podcast for, as it says on the tin, for CMOs, for marketing leaders who want a little bit of, honesty and raw discussions. So. And then finally, I suppose I've also been labelled, this makes me cringe, but a top 10 RegTech influencer, which really sounds more glamorous than it is and basically just provides a lot of jokes for my friends.
Well, it's brilliant to have you on the show, and we look forward to digging into your many, many insights as we go along. And last but not least is a welcome back to the show for Tom Davies, now founder of Brandingo. You've got a new role since joining us last time. Thanks for coming back on the show. Please, can you tell us a little bit more about what you've been up to?
Yeah, sure. Well, first off, hi, everyone, and thank you for the invite. back on to the show. Yeah, I mean, my background, I've spent the best part of the last 10 years doing marketing at Wise, Monzo, and as the sort of founding marketer and VP of marketing at Yonder. And so sort of fintech has been very much my bag for as long as I can remember. And then recently I took a sort of sabbatical. I've just got back from sort of a 9-month break from work, and in which I've started building a tool called Brandingo, which serves to help startups track their brand strength. It's something that I really challenge with at Yonder, and a lot of early stage companies are flying blind when it comes to understanding whether their brand is actually growing or not, and sort of hoping to be able to build some tools to help marketers out there. So I also write a Substack called Marketing is Hard, which is really a response maybe to this sort of feeling within the tech industry that I've felt over the years that marketing is easy. And so I'm sure sort of the rest of the marketers on this call can understand and relate. And in there I've tried to spend the last few years reflecting on the things I've learned about marketing within the sort of tech space, particularly in the UK.
Fantastic. Well, thank you so much for joining us. Lots to unpack there. We've got CMO therapy. We've got marketing is hard. We're painting a picture already, guys. But now we've got you all here. Let's kick off. And I want to start with the big picture. So for years, kind of financial services growth was driven by product innovation, performance marketing, and customer acquisition. Today, many of those tactics are becoming harder. Acquisition costs are rising. Products are becoming increasingly similar in the space, and customers have more choice than ever. So what actually works in financial services marketing? And maybe kicking off with, what are the biggest changes you've seen in financial services marketing in recent years? Who would like to kick us off here?
I don't mind. Okay, yeah. So I would say, what are the biggest changes? I think for me, one of the biggest things has been, so I come from the B2B side, so I'm looking at it more at the kind of the B2B, like fintech, regtech scene. And I think it's gone from kind of, that broad sort of brush approach of building awareness and then kind of hoping that the inbound is going to come after that, to really sort of like proving trust and proving ROI, which is a really big one. And then proving that fast, as you said, everything's kind of been accelerated now. So I think for years, really, the fintech and regtech sort of scene, or the marketing scene, was basically just kind of like, just put a load of content out there and really hope that is going to generate the demand, the right amount of demand, and then sort of seeing that come through. But I think, like I say, it's gone into this kind of like proving ROI now. There is a G2 stat that I found that basically said that 57% of B2B buyers now expect ROI within the first 3 months of buying something, within the first 3 months, which is absolutely crazy. And 11% want it immediately, straight away. So I think, for tools that used to sell on kind of like, okay, we're going to, help you better sort of to sleep at night, or, we've got compliance covered. It's not really cutting it anymore. They're actually wanting to see the return on investment from the spend. And it's not just the timeline, I think, that's changed as well. It's actually the whole kind of like buying committee, especially in B2B. So you're not really just selling to the kind of that one champion anymore. Everybody is involved in that decision because there's so much at stake, and they're looking for the ROI. So you're not just selling to the one kind of like user, you're actually selling to IT, to legal, to compliance, to multiple execs, which makes our job in marketing so much more harder, because we've got to look at all the different kind of messaging to each of those types of people.
Nicole, you're nodding. Would you concur with that?
It's very true. At Enfuce, we look at buying cycles that can be, anywhere from 6 months to 18 months, right? And it's not one persona you're addressing a whole village. And multi-touch attribution is so complex. So it's a fine line between trying to be everything to everyone, but still being authentic and offering them value. I think, previously in years gone by, a lot of B2B stuff, especially used to be, just shouting, hey, we're great, come buy us. But now you don't just need the ROI, you also need the proof points, and you need the authenticity, and of course the magic trust factor.
Absolutely. And then Tom, obviously you worked with a lot of the big B2C fintechs in the UK ecosystem. What's your take on how fintech marketing has evolved from the early days to now?
Yeah, I think, early days, there was such a gap in the product experience when sort of Wise and Monzo, probably most notable of the consumer fintechs, maybe Revolut slightly later, and between the incumbents, that the products grew themselves. And, we're seeing that in the annual reports early days, and continuing for Monzo now, where so much of it was just driven by the word of mouth, because consumers were almost just shocked at how good a banking experience could be. It's almost like they'd come to expect it to be terrible. And so when that changed, there was this wave of, movement from using these, banks that had seen very little innovation in, 100 years really, to products like Monzo with things as basic now as notifications when transactions happen on your account, that kind of stuff. And from there, I think it sort of moved into this around the same time of, the evolution of Facebook as a serious advertising platform. And so startups realized they could grow quite quickly in these platforms. But like any marketing channel, the value and the opportunities there decrease over time. And so it's, I think increasingly there's been this the marketers have almost been sold a lie in that they can build their brands or build their products on the back of these platforms. And I just don't think that's the case anymore. And I guess maybe to the topic of this conversation is that marketers sort of been left scratching their heads around, well, if I can't use Facebook and I can't grow on Google Ads or TikTok, what have I got left? And so it's sort of forcing marketers to be quite introspective around, what does it mean to grow a business nowadays? And so, the days are very much behind us, in where you can launch an app that looks nice and feels nice, and with pricing that's maybe just a little bit better than what's available, and just see your product take off in the market. It just doesn't work that way anymore.
Yeah, absolutely. And then I kind of want to get this out of the way early doors, because I don't think we're going to be able to avoid it. Bringing ourselves right up to date, AI is dominating kind of every marketing conference, industry event. It's the sort of the talking point. From your perspective, where we sit right now, not necessarily what we could do in the future, how much has AI genuinely changed marketing? Are we still in a hype cycle? Is it actually, moving the needle on any of the points that have just been made? Lucy, what do you think?
Yeah, absolutely. I mean, AI from two perspectives, actually. So internally, it's how we're using AI within our marketing, within our kind of marketing tech stack, and how we're using it, with our daily processes. But then externally, it's how our customers are using AI to find us. So there's kind of two angles that we need to be having a look at there on it. So I think everybody kind of always jumps, when you talk about AI in marketing, to how can we use it to do things kind of like faster all the time. So whether that's producing content or, that sort of thing, or, building agents that are going to help you to kind of write those briefs better for agencies and those sorts of things. But I think actually it's just equally as important to think about how our customers are using it to kind of to find us, and how we can build that into our strategy. So I'm talking obviously here about kind of AEO and GEO.
Mm-hmm. Yeah, absolutely. As more and more people are using AI instead of Google or other ways to find you, standing out on those platforms is going to make a lot of sense. Somebody told me it's like 54% of searches are kind of completed without ever visiting a website, particularly now with the sort of Gemini summary at the top. So you've got to really make sure that you stand out and actually are at the top of the search and are answering people's questions about you, because they may make up their mind about your brand before they ever even land on it or visit your website or anything like that. So
it's how you measure it as well, because what we're seeing recently is that actually people are using AI to go and do the searches to learn, but actually they're not clicking on the links to come through to your website. Then they're just using it as a search. But then for that, going back to trust, like we keep kind of going back to, they'll then go back to Google to type in your company name. So we've seen branded search actually go up, but it's then hard, for us as marketers to make that kind of link and correlation between, okay, well, we're putting in all of this work and we're seeing our AEO or AI sort of visibility go up, but we're not seeing the conversion from it. Why is that? Well, it's because people are going back to their trusted source, which is like Google, to actually then do the the kind of the search and the click through.
That's so interesting. You can kind of almost track people's behavior, and they maybe don't want to stay within the AI interfaces perhaps as much as we maybe thought. Tom, how does that align with your experience in using AI for marketing?
Yeah, honestly, I'm sort of a bit bored of the whole not to say that this discussion is not worth having, but I'm quite allergic to maybe the hyperbole around it. I find it quite frustrating.
Agree.
And I think it's often marketers that don't know what they're talking about, that are talking about like how it's changing marketing. And, for me, the fundamentals haven't changed. I think people confuse tactics and strategy a little bit too often in marketing. And so they're talking about how AI is changing everything. And I think I've been able to be a little bit more reflective of this now that I haven't been, working in a VP marketing role for the sort of like last year and a bit. And I've been able to look in and see what's going on and, advising other startups. So my view is that the reaction is perhaps a little bit too frantic and to scurry to try and integrate it into the way that you run your marketing team a little bit too much. I do think that there are fantastic efficiencies and ways that it can be used to, you talked about improving the way that you brief and documentation, all these things I think are really important. Having said that though, like I actually think that like a lot of marketing that I'm seeing lately, which is clearly generated or mostly generated through AI, is quite poor. And it's not really building the emotional connection with the customer, which I think is what drives the mental availability. These are the moats, and hopefully we can talk more about this as we get into the conversation, because it's quite funny now for me seeing that over the last sort of 6 to 9 months, I'm getting a lot more questions from people about how to build a distinctive brand than in the past. A year and a half ago, maybe 2 years ago, it was all about like, how do you build a growth and performance function that can, analyze its way to the top. And I think seeing that now with a lot of even these sort of AI companies themselves doing a ton of out-of-home traditional advertising, knowing that like the fundamentals around building salience in your market is just as important, if not more important now, when lines of code actually aren't much of a differentiator for you anymore.
Yeah, that's such a good point. And Nicole, I really want to pick up on that point around brand. Obviously, that's super important to you and what you guys do at Enfuce. Like I saw your, beautiful stand at Money 2020 with all the flowers and the colors and like really making a kind of statement. To kind of Tom's point, how do you do that? How do you build that distinctive brand? When there's sort of other players in the market doing similar things, how do you stand out? And is that sometimes actually more important than product sometimes to kind of make your mark?
Ooh, this is a juicy one. So I love brand. I live it. I breathe it. But here's the thing, is that the most important thing I've learned is that brand can't be siloed off. It can't be siloed off from product. It can't be siloed off from your customer success teams or your commercial teams. It needs to be holistically embedded and part of your company culture. It has to be rooted in your values. And, the reason why we have been able to be so creative with the brand we've been building is because it's so integrally rooted in who we are. And that's the authenticity thing. And that's the thing that, like, if you asked AI for brand ideas, it's not going to give you anything authentic. It'll give you some things that probably look nice, but you really need to look at who are you as a brand and as a business, and where do you want to go, and what is your message? It's like authenticity is the only way to stand out, but you have to believe it and build it.
Yeah, definitely. And as you say, it needs to be sort of pervasive through all company culture, because if the company doesn't actually add up to the brand when a customer interacts with you, then it becomes disingenuous. So like it does need to be, it's not just the logo and the colors and the kind of marketing pitch. It has to go all the way down through every interaction.
Exactly. And also the product still needs to be good. We can have the biggest, most gorgeous stands in the world at events, but it doesn't matter if the tech isn't working. So, it all needs to be part of the same universe.
Yeah, absolutely. Yeah, of course. I was being glib earlier, but yeah, it goes without saying that the product should stand out as well, because, otherwise branding is, a cover-up or a smokescreen, which is obviously not what you want it to be. So they completely agree that everything has to be completely intertwined. Lucy, kind of with your B2B hat on, what are the kind of main trends you're seeing around that sort of brand building space within, fintechs, regulation, that kind of super specialized environment?
Yeah, this is super specialized and regulated. Those two words that I think send shivers down marketers' spine. And this is, how can we balance all that kind of creativity? This is a really interesting one because I hear this all the time when people say, but it's a regulated environment. And I think the kind of instincts there is to then say, okay, well, regulated means that we have to dial down that creativity, or we've got to play it safe. And I think this is where it's, the industry does get it completely wrong, to be honest with you, because the fix isn't like to be less creative. It's actually to get compliance in the room and involved in those decisions, like working with marketing, like much earlier on. I think the brands that basically, the ones that kind of get it wrong are the ones where they've left all of that legal and compliance bit almost like a tick box at the end as the kind of the sign off without sort of bringing them in. There was one example I remember, which was around, it was Monzo, and it was this spending summary that they did. And I think there was one customer story that I heard where they actually reported or they escalated to the financial ombudsman because their personalized summary felt like it was like humiliating them. So I think the lesson here is just because they'd had a bad month basically and their spending summary wasn't particularly that great. But I think the lesson here is not to be personal. We've talked about this. We want to have that emotion and everything in kind of some of the stuff that we're doing. But it doesn't. It's don't be personal about something that's kind of like tense sensitive, without thinking about how that's going to land at the end of the month if that person's had a particularly bad month. So yeah,
personalized, maybe not making it personal, because on that particular thing, it was like part of the analysis that went with it, like felt like they were being called out or being dissed in some way, and they said that
exactly. And compliance can help you through that.
Yeah, exactly.
I probably I worked at Monzo. As half a chance I know some people that worked on this. I feel like actually, not to dismiss the way this person felt, but one complaint from 10, 15 million customers or something. I think a campaign that has been, I worked on it as well in 2020, and it was quite an interesting time to do that as well, because we were trying to work out how we could, make fun of the idea that people have been stuck inside all year at a time when there was also like a lot of devastation and sadness around that experience. It was quite tricky as a marketer. I don't think you can always get it right. I think marketers should do their very best to fight to be creative. I don't think marketers should go out to be destructive or to be meanful at all. But I also think that if you're looking for 100% hit rate on everything, then you'll never create anything that's distinctive or interesting in marketing as well. And so, look, I remember when that came out and there was a bit of backlash about it. I sort of, I certainly felt bad for the person that felt that they had been, maybe unfairly characterized by like Monzo. But realistically, I think Monzo are just trying to do something that's interesting and fun. And it's difficult with money. Money is very personal, the way people spend their money. And so, look, I'm always a big advocate of pushing the boundaries. We certainly did at Yonder a lot, taking the mickey out of American Express, and we actually did it. We would take, we would sort of point fun at our customers all the time. We did that as a collective, I would say, sort of like maybe around like general behaviors and never individual customers, and maybe that's perhaps where Monzo got it wrong, because even though it's like a broader product experience, it is for one person. But I really think if the learning from that is, you shouldn't personalize or you shouldn't try and be funny or be edgy, I think that's a shame for that to be the takeaway from that campaign, because then I think we're just going to end up in this sea of sameness and no one's doing anything interesting anymore.
Yeah, completely. And maybe just a quick word on sort of like referral programs and kind of customer advocacy and how valuable you found that at both Monzo and Yonder in terms of like turning your customers into kind of brand champions, essentially.
Yeah, I think there's a few reasons why people share products. The first one is maybe what we talked about at the start, when the product is just so much better. So the bar is so much higher. Customers are sort of so quick to do it, and that happens less and less now, really. The experience, it's hard to truly innovate maybe a consumer financial services experience now in the same way that you could do it 10 years ago. Just having a pretty app or something, or a bright card is not going to do the job anymore. And I think maybe where I thought we had some success with Yonder, and certainly with Monzo as well, was taking that sort of community concept, which maybe historically has been seen as, I don't know, like a chat room or like events, that kind of stuff. They felt like the very early days of what community building looked like in marketing, and starting to integrate that into the product itself. One of the great features that we built at Yonder, which was surprisingly super easy, and I just thought it was really hard and why it never happened, was the ability to be able to send points from one person to another, which, with an Amex you could never do, or any airline program in the world. They make it so hard, or they charge you a fee or something. In my head, I just thought, maybe it's just really hard. It turns out it's quite straightforward. And so, we started to see our customers were going to use their points together. They'd get all their mates together that had Yonder, and they'd go to a restaurant to use all their points at that nice restaurant. And so I think like building that community experience into the product actually drives a lot of virality there, because it's, if you got 5 friends going for dinner and one of them doesn't have Yonder and the rest of them are using their points to pay, then, there's a very good chance that 5th person's going to sign up at dinner. And we would see that a lot. And people would sign up during these experiences together with their friends. So I think that's probably where I see the sort of the community, sort of what's driving virality now. We're probably getting to the limit of what the financial incentives can do. I think as brands grow, you'll see Revolut and Monzo, I think they're offering upwards of £50 per referred customer now. I mean, when they first launched, it was probably 5. That's how much they didn't really need to offer that much to get people to try it out. And so while I think the financial incentive is more around getting past the friction of sharing, I don't ever think that that's going to be sort of the main reason why. And my guess is customers that refer because of some deeper connection to the product through the community, through, like I talked about before, probably leads to customers coming on and being stickier and using the product more and being higher value than ones that sign up for the 50 quid.
Yeah. That makes a lot of sense. And I think we want to come back to that kind of point around like brand and community, but we have to take a quick pause here, back very shortly.
LinkedIn is pretty amazing at helping you grow your small business. We cannot make your email response time faster. We can help you sell, market, and hire in one place. We cannot help you find space for your 3 desk drinks. Why do you have 3? And while we can't help you find the perfect volume for your presentation video, LinkedIn can help you find the perfect audience for your business. Grow your small business on LinkedIn. Learn more at linkedin.com/smallbusiness.
Study and play come together on a Windows 11 PC. And for a limited time, college students get the best of both worlds. Get the Unreal College Deal. Everything you need to study and play with select Windows 11 PCs. Eligible students get a year of Microsoft 365 Premium and a year of Xbox Game Pass Ultimate with a custom color Xbox wireless controller. Learn more at windows.com/student offer. While supplies last. Ends June 30th. Terms at aka.ms/collegepc.
Welcome back to Fintech Insider, where we're discussing the new rules of fintech marketing. So let's talk about where marketing is heading. We're increasingly seeing financial brands experiment with storytelling, identity, and emotional engagement. Recent examples include Monzo's Year in Monzo and Revolut's Welcome to My Bank campaign. Neither focuses heavily on product features, but instead they're trying to create a stronger emotional connection with customers. So Nicole, maybe kind of coming to you first on your thoughts around the sort of brand side of everything. Are financial brands becoming more emotional in how they communicate? Are they trying to kind of create a sense of belonging with customers, a sense of community? What's your take from a sort of Enfuce perspective?
Yeah, I would say it's less about emotion in the traditional sense. It's not necessarily like watching one of those, veterinary insurance ads that kind of make you cry because the puppy has a broken leg. Not saying they make me cry, but just a little. It's about human centricity, right? And actually looking at customers at eye level, which is what do they want? What will spark joy? Is it about, making them laugh? What is the feeling, And sometimes it gets a bit wrong. Sometimes you get the wrong, spokesperson, you get the wrong message. But I think financial services brands are trying a lot harder to go beyond just the nice logo. They are trying to figure out what people want. And even in B2B, you have to remember, for example, the cardholder isn't Enfuce's end user, but those are the end users of our customers. So you still need to think a step ahead to them and building these experiences that matter overall. So it is all about people. I think it is about creating identity. I think community is still a tricky one in B2B because in some cases it's just such a smaller swimming pool if you have a niche product. But I think in the world we're in, community is becoming more and more important on every level. You want to feel part of something.
Yeah, definitely. And sort of fintech has been praised in the initial stages for sort of, breaking down jargon, talking to people in human to human ways. Obviously, that's now become quite standard, but I think it is that human connection, even within B2B, that you're not, you're talking to the customers of your customers, you're talking to the end user, not just, businesses are made of people. So even business to business is not like a building talking to a building. It's still people at the end of the day. And so, making people feel part of something, even if it is a B2B transaction, I think is super important. Lucy, what would be your take on that in terms of, we've sort of talked about, trying to balance creativity with being highly regulated, but, are there limits to how kind of consumer financial services can compete with B2B in terms of how they speak to their customers, how they conduct themselves? What do you think?
Yeah, and I don't disagree with what you said about the whole kind of B2B, B2C sort of conversation. At the end of the day, it's always a P2P kind of sell, right? It's a person to person at the end of the day. But I think, like I was saying at the start, though, I think the biggest kind of this shift now in B2B in particular of when you were looking at kind of buying a platform for your business and for your team, you were looking about how it's working and what the features are, and whether you're is going to be able to do the job that you want it to do. But now there's this whole ROI kind of story and this defense in having to defend kind of the purchase, within 3 months and show ROI. I think it really puts a different kind of spin on that conversation and how you build that trust with the buyers. I think you do still have to, they do still want to feel like they're kind of part of a community. That's definitely something that I think can be done more in the world of B2B. We generally think because it's a business-to-business sale that you just have to, show them the tool and the demo will kind of, will sell everything. And it's not the case. They need to be kind of on board with it, the brand and everything as well. But yeah, I think, again, going back to what I was saying about the regulated companies kind of thinking that they can't kind of be creative. They absolutely can, but I think maybe not quite in the same way that you would with a kind of a B2C brand.
Yeah, definitely. And Tom, that we're seeing an increasing kind of trend, I guess, in turning customer data into stories, kind of creating those experiences that people engage with, they share. I'm meaning sort of Spotify Wrapped, Strava's Year in Sport, Duolingo's Recap. I mean, Monzo obviously famously do Year in Monzo to bring it back to fintech. It's a trend that people are jumping on with less or more success. I know people are not really loving Trainline's Year in Wrap, showing them exactly how many trains and how much money they spent on travel. Like that one didn't land so well. But what's your take on this kind of trend? Is this sort of, do customers enjoy this? Are they sort of waiting on this now? Has it become an expectation? What do you think?
I think it's definitely overdone. And I think what a lot of marketers don't ask themselves is, just because something can be done, should it be done? And we had a ton of interesting data at Yonder, and we never did this. And it was mostly because we didn't think we could do it well enough for it to feel something our customers would like. And so I even think like Spotify have sort of gone in waves of it being really good and feeling great, and then also just feeling sort of thrown together. And so it's probably like a broader thing I think marketers need to think about is, right, just because everyone else is doing this and we have the data, should we do this? Is it what our customers really want? Do we know? If you know your customers really, really well, then you should be able to answer that question pretty easily. I actually think at Yonder, our customers probably would have loved it. And we had the kind of brand and the kind of tone that I think we could have got away with being quite cheeky and in a way which maybe Monzo couldn't. But we just didn't have the resource or the sort of time or frankly the energy to do it really well. And so maybe it comes back to like a principle of mine around like, I only really ever want to do things if I can do them really, really well. And I'd much rather do fewer things as a marketing function really well than to do a lot poorly. So there are so many opportunities that will come across your desk as a marketer, and maybe it's like sponsoring an event, or it's, I don't know, like doing a year-in summary. And actually saying no to these things, I think, is probably the difference between like good and great marketing and picking the few things that you think you can execute like really, really well, and then just letting the rest pass you by. And look, I mean, I was getting emails about I can't even think of them now, but I was just like, oh, give it a rest, will you? Like, I just don't care. And I imagine a lot of people felt that way. And look, at Monzo do a great job, don't get me wrong, and so does Spotify, and there are other brands that do this really, really well. But do you have to do it just because you've got the data? I don't think so.
Yeah, there's a lot of people that want to jump on the trend without working out whether the trend is actually useful to their brand or adds value to their customers. I mean, exactly, I was laughing at sort of the train line example, but do I really need to be told that my most popular station is obviously the one that I go to and from to get to the office? Like, I know that. You're not telling me anything I don't already know from the data. It's not interesting.
Laura, you just said something interesting though. It's like it's jumping on the trend without actually sort of taking a step back and thinking, well, what is that trend trying to do? Like, what are we actually trying to achieve here? So if you take the kind of Spotify Wrapped, from a compliance perspective, I'm sure, or maybe they do, or maybe I'm wrong, but I'm sure they don't want to know, well, what regulations did I look into the most at the end of the year? It's not really uber sexy, is it? But actually all they're doing is, if you look into what they're actually trying to do, they're just trying to create that kind of, that viral sort of like sharing moment of comparison and then it sort of turns into the referral. So how can you kind of just take that concept and actually then apply it to your world? That's probably the better thing to do, rather than sort of trying to jump on a trend that isn't necessarily going to land well. Like we in B2B, for example, like I really like the way consumer brands, so like Monzo and others, really get into the referrals, right? Leave us a review, not referral, sorry, reviews. Like, leave us a review on this site, or rate the app on Apple or whatever. And that there is an equivalent of that in the world of B2B, right? With kind of like G2 reviews or something like that. So yeah, not so much jumping on the trends, but just sort of taking a bit of a step back, I think would be my advice.
I think that's the thing, is if you're going to hop on a trend or even consider a trend, you have to make it relevant to your brand. If not, it does look like you're just knocking off what somebody else has already done. And I think even deciding, as Tom said, like, do we have to do everything? That's a brand choice in itself, to say, no, that's not us. Otherwise, we'd all be sponsoring hockey teams in Arizona. I got that email 2 weeks ago. It's just like, yeah, you have to really curate your brand and your marketing to make it connect properly.
Yeah, completely. And as you say, like, kind of knowing who you are as a brand gives you a kind of cheat sheet to sort of yes and no things against, because you know who you are and what matches your brand, and then equally what doesn't. Nicole, what's your kind of take on some of these campaigns, like a Year in Monzo or Welcome to My Bank, which was Revolut's kind of campaign. They put Graham Norton on their campaign. They've equally done one with Manchester City striker Erling Haaland, to kind of showcase parts of the platform, but also kind of bringing out his personality and trying to make him a bit of a brand advocate. Like, what's your take on these kind of more flashier campaigns?
It's great fun. I see things in two ways, right? I see it in terms of being the brand marketer who looks at that and is just like, I want a field of horses. I want to put a celebrity on a horse. I have no idea why Graham Norton is on a horse. Maybe there's a cultural thing I'm missing somewhere. But I'm like,
is it like a Mickey take of the Lloyds, like black horses running everywhere, and there's the one that's different? Like,
Okay,
And that's what I thought it was.
Okay, this is when we realized I'm not from the UK, because I watched this ad a million times. I'm like, still don't get why he's on a horse, but I know who Graham Norton is, and he's good fun. And what's cool is he's also one of those spokespeople that resonates across generations. You know, like even my mom knew who that was and thought it was good fun. So there were some really cool choices made there, but also when you even look at simple elements like my bank, it feels personal and it feels relatable. And those little basics, celebrity or not, are amazing little things you're planting in the messaging. So, on one hand, I look at this stuff, and as, the audience, I think it's good fun. As a marketer, I'm like, I want to do cool stuff like that with horses. I'm pretty sure my management team will say no. And bonus points to anybody who can tell me who the ideal celebrity spokesperson for Enfuce would be.
Oh, have to come back to that one.
Yeah.
But that's worth thinking about. But yeah, Tom, was your take kind of bringing back to the kind of the AI piece? I know you don't love it, but we'll come back to it in terms of like how does AI impact the ability to create content and personalize experiences, but also, does it help or hinder a brand's ability to be authentic, do you think?
I think at the moment hindering. I think we saw something similar with Canva over the sort of the last 10 years, where out of nowhere, anyone could produce sort of nicely designed brand assets. And I think that this is sort of my one frustration with sort of the tech industry or in general is there is this a constant confusion between branding and your brand, and where branding is seen as being your brand. And the best way I describe it to people, it's like the physical appearance of someone versus who they are inside as a person. And Canva has, tricked people into thinking that they can have a nice brand in, like a click of their fingers. And I think with AI, we're seeing the same thing. You can have a blog post in an instant. You can have a website. You can have a product now in an instant. And if anything, it's actually just showing how hard it is to create things that actually are valuable and useful. And that's maybe on the sort of product side of it. It exists on the brand side too, to create something that people really love, that is distinctive and memorable and actually does the things that marketing science supports, that says that strong brands have, is really hard. There is no replacement for things like mental availability. And it's quite funny now seeing brands like Monzo and Revolut, Monzo sponsoring a Premier League club as of next season, Revolut getting Erling Haaland everywhere. They're going back to the fundamentals that these brands dismissed 10 years ago around like how brands really grow. And so it comes back to my point that growing a brand, and this is what I'm trying to work on with Brandingo at the moment, the fundamentals have not changed. And so what AI has allowed people to do is to produce a lot more work, but the bar is still so high to actually create value from that work that I don't think it's, certainly on the creative side, I don't think it's working just yet. From the process side, absolutely making things quicker, and documentation, as I noted before, these kinds of things absolutely make a big difference. But I'm yet to see sort of a brand generated with AI that is truly memorable and distinctive. And the best marketers will know that. They will know how to use it to make them more effective in their role. But I was talking to the CMO the other day that was, closing down a street in London to shoot a TV ad. And his philosophy was, look, we could have done this with AI, but that's not going to create the quality of creative that we need to stand out. And I really sort of backed him in his philosophy there. And so, look, I can talk about this all day long. It's so important that marketers understand the difference between, doing work and doing really good work, and how AI fits in there, because it's not the answer for everything.
Definitely. And it comes back to that piece about authenticity, because, your brand inside out. Does the AI in order to replicate it so that it actually comes across as authentic if you're going to put AI generated content out there? And also customers, as everyone is starting to be more exposed to AI, meaning that people can more easily discern when something is AI, and they will draw their own conclusions about their brand, about your brand, if they suspect that you've used AI in your content as well. Lucy, what's your take on that in terms of the sort of regulated space, how much can AI play a role without losing that authentic piece or indeed that regulated piece?
I think, one thing, I suppose I'll start off by saying, actually, I think we're just seeing the start of this. I hate to say it, but I feel like we're just seeing the start of this. I do think we're going to go through a bit of a longer period. Like, Tom, you've really made me think actually back about kind of Canva and kind of what we saw there. I think you're right. Like, we're going to see a longer period now of this volume, just constant kind of like speed and quantity of content that's produced by AI. I think there's more to come on that, unfortunately. I'm not saying it's right, but I think there's going to be more on that. But I think what's not going to change in our world of financial services or in this kind of regulated environment is that it's ultimately, at the end of the day, it's all about kind of human judgment and emotion. Like, we're dealing with people's money. And I think, that's the way that the choice is always going to be made, is like, it's an emotional choice. And, does this organization kind of have my back? Are they going to kind of be there for me when, things go wrong? And that's the bit that AI can't touch. Like, AI can't generate that sort of content that really kind of like tugs at the heartstrings and makes people stand up and kind of really believe that about a brand. So that's, I think, what companies really start to or need to lean into.
Interesting. And then, Nicole, coming to you in terms of Enfuce is obviously on a growth trajectory at the moment. Tom's talked about obviously like Monzo from the early days, and now they're doing sort of the kind of campaigns that incumbents would have done. How do you kind of keep the personality of your brand from, startup, challenger, scale up to the size of an incumbent? What's the trick there?
Yeah, so this is a great question. 3 years ago, we had our brand evolution. We went from, that perceived very small little Finnish startup and, catering mostly to fintechs. And these days we work with amazing enterprises, Porsche, Circle K, Octopus Electroverse. So that's a very different kind of customer. And it's not about losing your personality. And I've had some interesting internal debates over, like, can we still talk about happiness? Can we still be so much fun? Because, like, what if the B2B folks get offended? And, we've also talked about, like, the regulator and compliance and all of this. And then it goes back to the humanity again, which is there's still people. But here's the thing. What we have changed over the last couple of years is the tone, the wording, the storytelling. You nuance it to work with your audience. I see brands as living, breathing things. The thing we launched 3 years ago shouldn't and definitely isn't what it is right now today. And that's what's important. I think as brand builders, we can't just say, oh, cool, this looks nice. We're just going to roll with this in perpetuity. And that's really the thing. You have to really understand that if you are the incumbent and you are talking to, enterprise or to, thinking about some of the things Lucy said, regulators, you do have to alter your tone and really look at what is your message. And that's a little bit more nuanced than just trying to glaze over it with one paintbrush.
I love that. I think that's good. We are almost up on time here. I know between the four of us, we could probably go on for hours, but we won't do that to the listeners. I just want to go around the houses a bit and ask you one final question each. What's one marketing lesson that financial services still hasn't learned? Tom, what's your take?
Yeah, I actually think I maybe gave the same one when I spoke last time on the podcast, but I think it's that...
If it's still true, then it's
still true. It's probably the one thing that I believe more than anything else in marketing and something that I really wish other marketers would, think more about. Not to say that I think I'm right, but it's something that I genuinely believe myself is around just the importance of creative quality and making time for excellent creative. I think there is still if anything, probably more important now to be able to come up with distinctive creative, and whether that's advertising campaigns or just social media concepts or website messaging, whatever it might be. I think that it's just so easy to go with, well, now that whatever the AI sort of like writes for you or what the first thing that comes to mind. But I can't think of a single campaign that I've ever done or I've seen other marketers do that was great, and it was the first idea they came up with. And so, the biggest lesson for me is that you have to fight for good creativity, and I really wish I would see more of that in and being a regulated, industry. I think it certainly can make that trickier, but I actually think it makes for better marketers because you have to be more creative, even more interesting, even more entertaining to be able to promote your products in a way that is fair and compliant. So yeah, it's my lesson. And if I come on again in 6 months' time, I'll probably tell you the same thing.
That's fine. Keep banging that drum. Lucy, what's your take? One marketing lesson financial services still hasn't learned.
Yeah, I think for me, it's got to be the industry kind of is still mixing up, sounding like technical and then sounding credible. And in B2B RegTech, I think we are one of the worst offenders for this. I can't tell you the amount of times that I've sat through, sales decks where you've got that kind of, frictionless, best in class, end-to-end platform, word soup going on. And everyone's just kind of sitting there going, yeah, sounds great. Like, sounds credible. And nobody actually really knows what that means. It's just kind of, it's word soup. But I think what kind of needs to change and I'm starting to see change is that AI can generate all of that, all of those words in literally like 4 or 5 seconds. And so everybody, all of these new companies that are spinning up and even old companies as well that are looking at kind of doing their, rebranding or looking at their messaging, they're coming up with the same like words again. But I think the difference will be like if you can actually explain what you do in plain English. So I'm not talking about, like for dummies or like dumbing it down for a toddler, but, just plain English, like exactly what you do without all of those like fancy words. I think clarity for me is kind of the moat now. Out with the jargon. That's everyone was kind of hiding behind that, I think.
I love that. And Nicole?
I think there are still too many fintechs and financial services brands, especially in B2B, who really think brand is just a logo, maybe some nice colors. Like in B2B, be brave, experiment, be creative. B2B shouldn't be where creativity goes to die. So yeah, I see way too much boring stuff. And I think, those marketing teams need to have a bit more fun and look at how to bring things to life authentically.
Yeah, I completely agree. And I think, to your point, so many people think brand is just a logo you slap on the top of something and that's it. And it should be so much more. So much more than that. But I love just the idea of, just have fun with marketing. If you're having fun and it's resonating with people, then that is usually what makes all the difference in the world.
There's a guy, I just very, very quickly, if that's all right. There's Seth Godin, which I'm sure everybody kind of knows from a marketing point of view, a marketing guru. And he said, what you've got to look for is everyone needs to be remarkable. So, you're not looking at being unique. In a way, there's no such thing as USP anymore because AI can spin it up tomorrow, like, in 4 or 5 seconds, but look for remarkable. And remarkable means 2 things. One, it means great. Remarkable, it's fantastic, really good. But it's the word remark on remarkable. Remark means conversation, like to remark. So anything that you do, like Nicole said, if you're being brave and you're, doing things a little bit differently in the B2B sense where it's never been done before, if you're creating conversation out of it and people are remarking on it, then yeah, you've won.
Absolutely. And I think that's a perfect place to wrap up today's discussion. So thank you so much for joining me. Thank you so much for sharing all your insights. Please tell our listeners where they can find more about you and your companies. Let's start with you, Nicole.
Sure. Find me on LinkedIn. Always happy to chat about all things brand and creative. And of course, if you're curious about Enfuce's content, check out Enfuce's LinkedIn page or website.
Wonderful. And Lucy?
The same on LinkedIn, find me, or CMO Therapy podcast. Go and have a look. It's on all the top podcast channels and YouTube as well. Any questions about compliance and regulation, RegTech, it's a really sexy topic, I promise you, then come and give me a shout.
Brilliant. Thank you. And Tom?
If you're a marketer and you're interested in sort of seeing how your brand is growing, then you can check out Brandingo. You can just find it on my LinkedIn. And likewise, you can check out my Substack, Marketing is Hard, where I sort of write about my marketing learnings and stuff over the years.
Brilliant. Thank you. And you can find me, Laura Watkins, on LinkedIn, otherwise 11fs.com, or on this podcast. So thank you for listening. If you like what you've heard, don't forget to follow the podcast. And as always, if you want to join this conversation, find us on social media. Just search for 11fs or Fintech Insider and we'll be there. Or email podcasts@11fs.com. Thanks very much. Goodbye.
Meet the new iSIMS, the single talent acquisition platform that's fully future-ready. It works wherever and however you hire, with insights no one else offers. One solution that fits seamlessly into your existing tech stack, which is why IT and HR leaders trust it. With the best of enterprise-grade software and AI, iSIMS helps you identify and secure the right talent faster. iSIMS, powering exceptional hiring. Learn more at isims.com.
Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.